Hello and welcome everyone. I'm Tom Bowley, Chief Market Strategist at earningsbeats.com, and this is Trading Places Live. It's Monday, April 19th, 2021, and I'm pre-recording this Trading Places Live for Tuesday, April 20th. Futures currently are green. It was a rough day on Monday. We'll go through those numbers in just a bit, but it does look like we'll get off to a decent start, at least based on futures this evening. Dow futures are up 62 points, S&P up 6.5, NASDAQ up nearly 25. So all three just a little bit below 0.2% higher. Oil starting to move back up a little bit. Oil back to about $64 a barrel. And the U.S. 10-year Treasury yield back to around that 1.60 level. We'll take a look at that in just a few minutes. Before we get into all the action today, though, I will run down the agenda for you today. We'll start off with the daily market recap. Then we'll get into talking technically, take a look a little bit at the S&P 500. Chart breakouts, false. Chart breakouts that were false breakouts is what we're going to take a look at. Then we're going to get into support and resistance, some key stocks showing you, those of you maybe who don't follow a whole lot of technical analysis, just kind of show you what some key support resistance looks like on some various stocks so that you can quickly, begin to spot visually some of the things on the charts that can really help to lead to some better investment decisions or trading decisions. Then we'll get into the earnings spotlight, and we'll wrap the show up with the three you must see. But before we get into any of that, let's go over to earningsbeats.com. If you are new to Earnings Beats, love to have you join our free newsletter, the Earnings Beats Digest. Comes out 3 times a week, Mondays, Wednesdays, and Fridays, just before the market opens. All you need to do is type in your name, email address, hit that subscribe button. There's no credit card required. It's completely free, and you may unsubscribe at any time. It is an educational newsletter, so we do just try to provide some of the ways that we look at the market at earningsbeats.com. I think maybe it'll help in your trading and or investing. Some of the topics include relative strength, key earnings, some of the things we're going to talk about today, false breakouts, price support, resistance, all these things are part of what we like to look for at Earnings Beats. So again, just type in your name, email address, hit that subscribe button, and we'll get you set up. All right, Monday was not a very good day, but I'll tell you this, historically, the 19th day of the calendar month is the worst day of the month. And also the worst day of the month is any Monday that follows option expiration. So the Mondays that follow option expiration, of course, sometimes that falls on the 19th. Options expiration is always going to be between the 15th and the 21st of the month. The third Friday has to fall the 15th to the 21st. So the Monday that follows has to fall from the 18th to the 24th. And so today was the 19th and Monday the 19th, and was not a good day. And historically, that seems to be the case more often than not. Dow Jones Industrial Average down 123 points, down 1/3 of 1%. The S&P 500 down 22, or roughly 1/2 of 1%. The NASDAQ down 138. So on a relative basis, hit a little bit harder, down almost 1%. Mid caps down 17 points, or close to 2/3 of 1%. And then small caps, the S&P 600 small cap index down 15 points, a little more than 1%. So not very good action, but this is kind of historically what we would look for. In terms of sector performance, look at the two leaders, the only two groups to finish in positive territory: real estate, healthcare, two defensive sectors. On the flip side, the three weakest groups are our three most aggressive sectors: discretionary, technology, and communication services. No damage was done, though, with any of this selling. I mean, you can see the discretionary, technology, and communication services all trading above their 20-day moving averages, which in turn are above their 50-day moving averages. All the PPOs are in positive territory, and all the AD lines fairly strong. So I don't see anything wrong with the market here. In fact, probably just getting a little pause due to a little continuation effect from options expiration. This is typical. The 19th to the 25th that's the worst period historically for the S&P 500. Looking at just about every month. December is an exception. but most months, the 19th to the 25th is the time of the month we need to be a little careful of. And of course, that was today, and so we got off to a rough start. But overall, I still think the market looks pretty good here. Let's move on to the 10-year Treasury yield. There are no key economic reports, nothing of significance until Thursday when we get initial jobless claims coming out at 8:30 on Thursday. Until then, the bond market really can head, wherever it wants to head. There's not going to be a whole lot of news for bond traders to trade off of. I will say, looking at the chart here on the 10-year Treasury yield, been talking about this for the last few weeks, but that PPO rolled over as we kept trying to go higher, put in that double top, and we came back down and we failed to hold the 20-day moving average. I was looking for that to give way. I thought maybe 150 would be an area to watch for, 1.50%. We got to about 153, and then over the last couple of days, you can see we bounced back to the upside, closing near 160 on Monday, but we did test that 20-day from underneath. And so another move back down, perhaps to 150, maybe even a little bit lower. Wouldn't be a surprise. That could coincide with some more rotation from value back into growth. And mostly it's been going the other way of late. But I wouldn't be surprised if the 10-year Treasury yield does move down over the next few days, that we could see the growth stocks maybe lead again for a short period at least. We'll see. All right, moving on. I want to talk a little bit here in talking technically about the S&P 500. This is a 1-month hourly chart, and there's not a whole lot of selling. I mean, once we got to the end of March, the 26th to the 6th of all months tends to be, historically is, the strongest period of the month. And so you can see this reversal took place on the 25th, heading into the 26th. And we went right up until the 6th, pretty strong, straight up, but didn't stop there. We've slowly been working our way up close to 4,200. Today's move down, though, I don't know, just felt like maybe the start of a little weakness. I would annotate a couple of levels here that we can look at that I'd be paying attention to. So here was the high back on April 14th before we pulled back, and then we broke out and went through. Then we also had this gap support right here where we gapped up and opened around the 4140 area. And notice right between these two levels is that 50-hour SMA. So I think 4150 to 4140 is short-term support. Can we hold that? If we don't, then I think we could be in for a little bit more rotation out of the S&P 500. It could be just some profit taking overall in the market, or it could be rotation from the S&P 500, maybe back to the NASDAQ, maybe to small caps, maybe to mid caps. Mid caps recently broke out. But the S&P 500 has been very strong. It's been one of our leading indices. And as a result, we could see some profit taking, a little bit of short-term pullback, and some rotation back into some of those other areas. But I think 4140 to 4150 is an area that I would watch pretty closely. If we lose that level, I think we could see the selling accelerate a little bit more in the S&P 500. The numbers, let me see if I can find these numbers for you pretty quickly here. I'm looking for the historical numbers. I talked about the 19th to the 25th. I was going to give you some numbers here. Okay, let me see. I think I got it right here. All right, so if we're just looking at the 19th through the 25th on the S&P 500, let me give you these numbers. The annualized return, and keep in mind as I go through these numbers, the average annual return on the S&P 500 since 1950 is 9%. So these annualized numbers that I give you by day, if they're at 9%, they're kind of doing what you would expect. If all days were created equal, the annualized return on every day would be 9%. And that would work out to roughly 9% annual return. But that's not the case. Listen to these numbers. 19th of the month. This is the 19th of every month, January, February, March, April, all the way throughout the year. 19th of every month since 1950. Annualized return, minus 33.66%. By far the worst day of the month, the 19th. The 20th, minus 8.52%. The 21st, positive 3.23. The 22nd, minus 10.74. The 23rd, minus 5.45. The 24th, minus 0.54. The 25th, minus 6.32. So from the 19th to the 25th, those 7 days, 6 of them have negative annualized returns. Only the 21st with that positive 3%. That's the only day of that week from the 19th to the 25th that has an annualized return greater than 0. None of them are close to 9%. So that period historically, and to just summarize it, the 19th to the 25th of every month since 1950, that's 4,062 trading days. There's normally 253 in 1 year. So we're talking about the equivalent of about 16 years of trading data. 4,062 days. That's about 16 years worth of data. Annualized return, minus 8.93%. Our annual return, average annual return is 9%. So that's about 18 percentage points below normal from the 19th to the 25th. That's statistically relevant. And as a trader, you need to be aware of it. If you're buying and holding and, you're not really paying close attention to the market, in the long run, who cares? But if you're a short-term trader, you need to be aware every month when you get to this period, especially if the market's gone up a lot and is ripe for a pullback. Just keep in mind, this is when it typically occurs. So anyhow, I thought that was interesting and wanted to share that with everybody. All right, let's keep moving on here. So next up, let's talk about those false breakouts. So chart breakouts, false. So just throw that little word in there. That makes a little different look at the chart, because a breakout, you expect to be a breakout. You don't expect to be a head fake. Well, look at this stock. This is Bowley Financial Solutions, DFIN. And I get nervous when I see a chart like this, just in the short term, because here clearly we had a move up, maybe call this a cup with a handle, but we hadn't been able to close above 30. Well, intraday on Monday, Bowley Financial Solutions hit a high of 31.31. Now, we haven't been able to close above 30. We were 4 percentage points above that 30 level intraday. The volume was heavier than normal. And what did we do? We came back down and closed at 28.96, near the low of the day. When you get those tails up above resistance, that makes me nervous in the near term. I would expect short-term selling. It's not a guarantee. I've seen plenty of charts look like this. The next day we gap up and make the breakout and head up. But technical analysis for me is about assessing risk. It's not about being right all the time. Those who don't follow technical analysis will always point to the things that don't work and say, see, technical analysis doesn't work. Well, technical analysis is not a guarantee. Technical analysis should be used to assess risk, to manage your risk. And so when I see a stock like this, to me, the odds are that the stock goes lower. Not the guarantee, but the odds. I believe it's more probable that DFIN goes lower. So if I own the stock and I saw it in breakout mode intraday, I probably would have had a stop on any close today below 30, because I just wouldn't want to, and I say close below 30. If it was 3:30 or 3:40 in the afternoon and we were back down below 30, I probably would have gotten out. Just because that's not what you normally want to see with a breakout. You want to see that breakout hold. And the volume was there to confirm. So this is one. Let me give you a couple others here. TGNA. This is Tegna. And I like this stock, by the way, but don't like the action today. Reversing candle. The AD line looks very strong, but we had the breakout last 2 days, and then we put in a reversing candle. Volume ticked up just a little bit. I think a 20-day test is very possible, and that's down at 2013, which is almost 4% lower than the price closed on Monday. So I think in the short term, we could see a little bit of weakness here on TGNA. Oracle. Now, Oracle has been on fire. I think Oracle looks really strong. Even when we got the gap down on big volume, you could see we closed back near the high of the day. I think there's been a lot of accumulation taking place on Oracle, and now I think it's just on a roll to the upside. However, this was probably the most bearish candlestick that we've seen throughout this uptrend. Volume was up over 20 million shares, or right around 20 million shares. Clearly the heaviest volume over the last few weeks. And we closed down near the low of the day after having, it looked like we were going to just have another routine up day like we've been having for the last few weeks. But that reversal tells me maybe, just maybe, that we've topped. Now, if you look back over the last 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Last 12 days, we put in higher lows. So if you're a little, nervous, I would just say if we take out Monday's low, which was 78.34, that's only 41 cents below the close. If we take that out, we will have reversed 12 days in a row of having higher lows. Maybe that leads to more profit taking. I'd probably just be a little careful in the near term. All right, then you've got AAP. This is Advanced Auto Parts. Off of this uptrend, AD line looks good. Again, everything looks pretty good. However, we did reverse after being up to 196.17, came back and closed at 192.54, almost right on the low of the day. Short term, that's a little bit of a problem to me. I wouldn't be surprised to see us move back down in the 180s, maybe around 187 or so, get close to that 20-day moving average. Then I'd be more interested. BTI. This is British American Tobacco, and that is a massive reversal. We were in breakout territory. Look at the volume. It's the heaviest volume of the last year. Gapped up to 41, closed back down at 39 and change. Bearish engulfing candle. I would expect a minimum move tomorrow down to the 20-day moving average, possibly all the way back down here to about 38, which should be pretty good support. Philip Morris PM, another one in that same space. AD line looks good, but again, that reversing bearish engulfing candle on increasing volume makes me think we're probably going to get a minimum of a 20-day test. Last one I have for you, CNI, this is Canadian National Rail. And we've had 3 attempts now to try to get through about 119. Today, the high was 119.61, higher than at any other point. Looking at this chart, and yet we came back down and closed at 118.13, near the low of the day. So we had a failure. Again, look for the 20-day test at a minimum. That would be just about 1.3, 1.4% lower. And this isn't a fast mover. And if it fails to hold that 20-day, then I think you've got a shot back at 113. All right, moving on, support and resistance. So again, this is just some of the charts that I wanted to show to provide some visual of what I think key support and key resistance is in terms of price. I mean, you have moving average support, you have trend line support. I'm talking about price support. So let's take a look here at Fastly. And if I just draw this price support resistance line across here, look at the low back in October. See how we came down, tested that? False breakdown, by the way. See that long tail, that hammer off the downtrend? Looked like we were breaking down. Just showed you false breakouts. Well, this is a false breakdown. And you see how over the next several days we went back up to the 20-day. So didn't make the breakout or breakdown. We had it intraday, couldn't confirm it. Then we went right back up, came back down, tested it again. This is a level I'd be watching closely on Fastly. Anything below about 62 on a closing basis, I'd be very nervous, especially a close back to below 60. All right. PUBM is the next one, Pubmatic. So let me pull this one up for you. All right, PUBM. Now, when I look at this from a support standpoint, my eye just goes back to these levels right in here. Multiple tests of support. And so just right there. So I try to line it up with the lowest candle body. So it's either the open or the close. That's like the rectangle part of this candle. And there's the lowest part. So that was the open that day. Right around $44, maybe just below. But look at how many times now we've been around this 44 level. Haven't closed below it though. So this is an area now. We're trading all the way up at 52. But this was just a support area that stuck out when I looked at this chart. All right, Square. Now, Square is interesting because I think it's a good illustration of both support and resistance. So let me annotate Square for you. So there's the resistance. See how we were struggling to get through about 280? Well, we just tested that, couldn't get through. And then you've got down here, all of these lows, maybe go down right to there because there's that prior high. Here is the breakout. Here's a low to test it, a low to test it, two lows to test it, a couple more lows to test it. I don't think it's hard to see this at all. I think we're in a sideways consolidation area here on square, 200 support, 280 resistance. And with the recent selling, we're back down almost right in the middle of it, 245. So I think square breaks out of this pattern, to be honest, to the upside. But that doesn't mean we don't go back to 200 first. That's possible as well. So trading in the range is really difficult unless you can get it right at support and sell it right at resistance. All right, next up, how about NVRO? Again, looking at support, I won't annotate just to save time. But you see all these support levels right in here, right at about 155, 156. Here was the candle body. Here we tested it. Here we tested it. Finally, we broke down below 156 on heavy volume. And look where we went back on the way back up. We went right up to 156 and failed, and then went to a new low. Now, we could be putting in a head and shoulder bottom, left shoulder, neckline, head, right side of the neck, or excuse me, yeah, right side of the neckline, now coming down, maybe putting in a right shoulder. Breakout above 155, 156. Remember, that was the support. That becomes resistance. So a move through 156 would be very bullish for the stock. Etsy. You can see the support coming in here right around 180, well, maybe around 190-ish. Multiple tests around 190, and now trying to get through 240 or a little above has been the area of resistance. GCI, you can see the support coming across here at about 475 or so. That's an area that we'd like to see hold. Resistance, I already showed you some on the stocks that I had for examples with support, but some others just looking at resistance. Cadence Design topped mid-February, tested it beginning of March, also tested it here just over the past few days. We got to get through about 148, 149. Intuit. Looking across here, you can see the resistance mid-February, came right back up, tested it, couldn't get through. So that's another one. Clearly, we need to get through there. Wayfair. Wayfair's had multiple tests over a long period of time. This is a lot of consolidation here on Wayfair. Here's your high about close to 350. This one went through 350, but didn't close above it. Same goes for all of these highs over here. So it closed back through 350 with some gusto, volume. That would be bullish. And then just two more here. EVH. This is Evolent Health. Resistance, I think, pretty clear here. Just above 21, maybe around 21 and a half. We got to get through that level. And we've got equal highs coming across. We got rising lows. So it looks to me like an ascending triangle. I think the chart looks pretty good here. But we got to get that breakout. Sea World Entertainment, SEAS is the last one. Look at that false breakout. See all these tops coming across here at about 52.50. See, we move up. Looked like we had the breakout intraday and then couldn't make it. And then look what happened. Went right back to the 20-day moving average, just kind of floundering. We've got to get that confirmed, the confirmed close above 52.5. All right, let's move on to earnings. Number of companies reporting after the bell on Monday. And one was IBM. So I'm going to pull the chart up here. And IBM, AD line's trying to strengthen a little bit. I'm still a little nervous about the stock, but it was up about 3% after hours. So we're talking about $4 or so to take it up to 137. We'll see if we can get this breakout above this area and see if it holds into the close tomorrow. UAL, this was the only one that I looked at that missed its estimate. It was supposed to have a loss of $6.97. It had a loss of $7.50. But IBM beat by 10 cents, 177 over 167. But getting back to UAL here, you can see we got some work to do. Been moving up. I see maybe a little bit of a symmetrical triangle, lower highs, higher lows, squeezing. But the stock is down 2% after hours, which would take it down a little bit over $1, maybe $1.20 or so. And that would be right close to that 50-day moving average. So we'll see whether or not we can hold that tomorrow. CCK. This is Crown Holdings. And Crown Holdings had the big breakout just recently. They did report earnings. They're up another 2.6% after hours. Bottom line, $1.83 versus $1.39. Seeing a lot of this where the numbers are coming in well ahead of estimates. CCK only up 2.6%, but those numbers were strong. And you can now see why we bottomed back in January around $85 and made our way up to 110. Market was anticipating this, and we're getting some good news after hours. STLD, pretty flat after hours in terms of price action. The expectation was $1.98. They came in 210. So another beat, nice beat. I would look to see if we can open up above 52.50 tomorrow. If we do and continue to run, that would be very bullish. Of course, Steel Dynamics is part of that steel group, which has been on a roll for the last few months. And Steel Dynamics relative to the S&P has been doing well. And until we started more of this sideways consolidating at this high back in March, Steel Dynamics was actually right at near 52-week high relative to its steel peers. So overall, I think the action here is pretty good. Let's see. The one that had the best reaction after hours, there weren't any big movers after hours that I saw, at least not based on earnings. But HXL, which is Hexcel, they reported a loss of 10 cents, but the market was expecting 16-cent loss, and they were up about 3% after hours. So it looks to me like off of this move to the upside, maybe the gap up tomorrow will start this move to maybe put in the right side of a cup. That would be something to look for. All right, moving on to the three you must see to wrap up the show. First, I just wanted to mention Netflix. Netflix will be reporting tomorrow after the close. So Netflix, and there are a lot of companies reporting tomorrow. I really like Travelers and AutoNation. I think both of those look really good going into their earnings. Tuesday morning, we'll see how they come out. I would expect very strong earnings from both of them, and then we'll just have to see what kind of reaction we get. But both, I think Travelers could break out with their earnings just based on looking at the chart. But anyhow, Netflix reports after the bell, and this is going to be one a lot of folks are going to be watching. A lot of sideways consolidation since the July high last year. So this one really hasn't participated as much as many stocks have. AD line's not horrible, but it's not breaking out. This is just one, I wouldn't expect a huge number. Netflix relative to the internet group, you can see just recently putting in a 52-week low. So all these things make me a little bit nervous on Netflix as we go into its earnings report. They have a history of blowing out earnings sometimes. You can see that back in January, big move up. But also we've seen some gap downs as well. So we'll see what happens with Netflix. I'd be a little careful with it. The next stock is Schlumberger, SLB. I just wanted to point this one out because when you look at it, it's been struggling here over the last month and a half. We did break out above 26. Here was a low at 25.5. So I think this 25.5, 26 area is pretty strong in terms of support. I'd be looking for a bounce for SLB off that level. And then probably one of the most bullish moves I've seen in the market recently, VMware. Look at all this sideways action for months and months, going back almost a year. 3 white soldiers on very heavy volume. That's a really nice looking breakout. Any kind of a pullback down at the 160 or maybe into the 150s would be very bullish. All right, that's it for me. Everybody have a great day. I'll be back Wednesday morning over at earningsbeats.com for your next Trading Places Live. That will start at 9 a.m. Eastern. Everybody have a great Tuesday. Happy trading.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.